Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Vancouver Resource Investment Conference. Today we're joined by Brent Cook, a mining analyst and author of Exploration Insights. Brent, it's great to see you again.
Likewise, glad to be here.
Now Brent, there's been this concept floating around called peak gold. Can you explain to our viewers a little bit more about that?
Yeah, that's actually interesting. It's something I've covered a lot in my letter. The CEO of Goldcorp, in one of his presentations and speech, actually told this to Wall Street Journal, that he said that we've reached peak gold production, and that if you look at a graph of the gold production, it's slowly risen, and he projects it to start going down. That's an interesting concept, but what I'm focusing on is what's really happening is we've reached what I think is peak gold discovery. And what I mean by discovery, it's got to be economic. And if you look at a chart of ounces discovery over the past 30 years, they peaked in about 96, and since then it's been trending down. The real issue is we are not finding enough economic deposits to replace what we're mining, and that's the issue.
Why did they peak in 1996? Was that because of the technology, like new technologies, or was it because the deposits are closer to the surface?
That's an excellent point. Why it peaked was basically most of the world opened up then. Latin America opened up, Africa opened up, Asia opened up to exploration. Until then, it had been mostly closed down. So explorationists came in, identified the low-lying fruit, the easy ones sitting at surface, and it's taken about 10 years for all those to come into full production. We have found a lot less of those outcropping ore bodies because they're not there. So and this is what's really important, what we're seeing happening here in the sector is that it's becoming much, much more difficult to find new economic deposits because we're drilling, through blind cover, we're drilling deep, and, Mother Nature, Earth formed, I use the statistics, for every 2.5 gram deposit that is formed, there's probably 10 1-gram deposits that are formed.
Okay.
So even drilling deep, we're going to find 10 1-gram deposits for every higher grade 2.5 gram deposit.
Right.
But those 1-gram deposits aren't going to be economic.
And drilling, the deeper you drill, the more expensive it is.
The more expensive it is to drill. And if you do find a deposit down there, you've got much higher capex to get down to strip it out. You've got to deal with water issues, social issues. Generally, when you've got a deep deposit, it's sulfide, so it's not as easy to process metallurgically. So all those things play into the reason why I think we've passed the point of finding easy deposits.
Right.
We've reached peak discovery.
And reaching peak gold, peak discovery, what does that mean? First of all for the gold price, and then what does it mean for the gold juniors?
I think what it means for the gold price is tough. I don't really understand the demand for gold. I'm not going to try and predict demand. My assumption is demand stays what it is. But what it really means for us, for the miners, is that they're mining more than they're replacing. Right. And to stay in business, they're going to have to find or buy new deposits. For us in the junior sector, it's positive in that all we've got to do is identify the quality deposits early on and own those. And eventually, I think they're going to get bought at a premium.
So you see a rash of M&A coming?
Not a rash of M&A. I think the majors right now are spending most of their time trying to cut costs.
Right,
Those
and absorbing all the acquisitions that they made.
Yeah, that's been a problem. They're cutting exploration a lot. Development's way down. Even maintenance is way down. These are all things they're doing to try and lower their cost of production, increase their cash flow, but they're shooting themselves in the foot. 2-3 years down the road, they're not going to have anything new. And I want to own what they're going to own, what they're going to want to own.
Right, so what are you doing with your money these days?
I've been buying selectively into projects, early stage projects that I think offer high margins, or will offer high margins.
Interesting. Now going back to the concept, of peak gold and peak discovery, does this apply to other metals or is it just gold?
Gold more so than most, but I think it applies to copper for sure, most base metals, certainly not iron, not commodities like that, but for the metals, particularly gold, it's a common thread throughout that is that most of the near surface deposits have been found, and without a real increase in the price of the metal, most of what we've got on the books, most of these, hundreds of 43 1R resources are going to stay that, just resources, because the marginal deposit, from my experience, stays marginal regardless of the metal price, by and large.
And what does this mean for investors? Does it mean that investors have to do more due diligence than ever before and be more careful?
I think so. I think it's key. You've got to know what you own, what it might be worth, and if you're in an exploration sector, you've got to have a concept of what success looks like in the drill hole. And even more than that, you've got to be confident in the team doing the exploration that they know what success looks like, and more importantly, what failure looks like, and get out of it. Too much money is wasted on projects that shouldn't be drilled.
Right. It's just not efficient.
Right. It's very inefficient.
Now, I think one of the hardest things to do as an investor is to learn selling discipline and to learn how to sell at a loss. We get our ego involved and we want to be right. What's your take on selling discipline?
That's been one of my hardest as well. I think when your investment thesis goes from whatever it is, they're going to find X, Y, Z, and it's going to look like this. When that doesn't happen, your thesis changes to hope. Like, well, I hope the next hole works. Or I hope this. I've lost a lot of money in hope, and that's what I've really tried to do, and I'm getting much better at it, is when my thesis goes bust, I sell. I don't worry about the price. I don't worry about what might happen next. It doesn't work, I'm out, I take the loss, move on.
So it's about setting up rules for yourself beforehand where, at this price I'm going to get out, at this price I'm going to buy more, that kind of thing, and then sticking to it when it actually happes?
Yeah, and it's priced to a degree in that you know what the deposit should be worth. But in an exploration, are these drill results, or these sample results, or whatever, confirming my thesis? Is it my porphyry copper thesis or whatever? Mm-hmm. Or is it not confirming my thesis? And if it's not confirming your thesis, get out.
So hope is dangerous sometimes.
Hope is very dangerous.
Now, how are you picking your winners right now?
I do a lot of due diligence.
Yeah.
In the letter, my letter's about what I'm actually buying with my money. So I'm extremely conservative. I try and keep it to less than 20 companies. And I'm just doing a lot of detailed work. Like in December, we bought 3 larger companies, mid-sized companies that have deposits that I think were being undervalued, and on the expectation that we'll get a pop into this year, and we've got that. So that's sort of how I'm doing it. But it's competent people, a real deposit, and enough money in the bank to make it through the year.
And what do you think is going to take to bring average investors back to the market?
I don't know. There's a lot of people in this sector now, in this room. But I think, once we get a few discoveries, a few more takeovers, rising metal prices, they'll be back.
Awesome. Well, it's great to have you back, Brent. Thank you so much for joining us again today.
Always a pleasure. Thank you.